Welcome everybody to Quantacast, our Professional Series episode 5 we are now. Today I'm joined by Michael Simpson from Intello. How are you, Mike?
Yeah, very well. Thanks for having me, Tim.
Yeah, great for you to be here. Intello are a self-managed super fund administration firm and part of the Prime Financial Group and were acquired by Prime in late 2022. Prime, for everybody out there, a financial services provider where they have a number of consultants working for them in business advisory, tax and corporate finance, wealth management, some wholesale property, some private credit, and of course specialised through Intello in self-managed super setup and administration. So Mike, welcome. Thanks for being here. This is hopefully one that our investors are going to really sink their teeth into. We're going to break things up today in talking about people who are going to convert potentially to a new SMSF, and also some tips and tricks on the way through. And then we're going to look at some existing things or people who have an existing fund and hopefully extract some good value out of you. But before we do that, tell us how you ended up being a director and now the BDM and partnership manager for Intello.
Yeah, thanks, Tim. So, I originally started my career as an SMSF auditor 12 years ago. I did that for about 7-8 years. Worked for Deloitte for a number of years. Got good foundations for the industry. And then when I started with Intello 5 years ago, moved into the accounting side of things. And then, worked my way up to client management. And then now I'm a director focusing on the BDM side of things.
Now, Mike, just confirming as well in the BDM role, whilst you do deal with individuals, do you actually go and seek out larger portfolios of clients? Is that right?
Yeah, that's correct. So we work with individual members, such as your Quanta investors and yourself. And then we also have partnerships with accountants, advisors who want to outsource the SMSF administration. And then we've also got partnerships with other brokerage firms who refer individual clients to us as well. So
okay.
A broad range of different client groups that we work with.
Great. Yes, I am. For everyone at home, I am a client of Intello. I had a really great experience with them over the last 12 months, and I'll be moving into my first audit and tax return coming up soon. Let's get into some questions, Mike, and I hope if you don't mind, I'll fire them off and you can share some of your experience with us.
Sure.
What is an SMS, or what is a self-managed super fund at a high level?
Yeah, high-level self-managed super fund is basically a private trust. It's a superannuation vehicle that is managed by individual members and trustees, and they've got access to then invest in and manage their superannuation themselves and invest in different asset classes that might not usually be available to the large industry funds.
Okay, great.
Yep.
And so where does the SMSF, where's it placed in terms of market trends and where's the growth going? Where's the sector going in terms of growth?
The sector's definitely growing. I think we're looking at about 40,000 new SMSFs being established this year.
Wow.
So it's definitely growing. They've tipped over $1 trillion in assets as a sector.
Yes.
So huge amount of backing there. And we've also seen demographic shift around younger people getting into self-managed super funds. So there's a rise of 30 people in their 30s and 40s setting up self-managed super funds rather than 40s, 50s people later in life. So that's a huge trend that we're seeing. And that's because younger generations want to, take control of their superannuation, invest in and have access to different asset classes like property. So that's what we're seeing at the moment. And I think another thing to sort of take note of is the intergenerational sort of wealth transfer that's going to be occurring over the next sort of, 5, 10, 15 years. It's tipped to be like 1.7 trillion in 5 to 10 years.
Wow.
It's going to be a big thing. And I think self-managed super funds play an important part of that intergenerational wealth transfer. These older generations are bringing their kids up through, bringing them into their self-managed super fund. So more recently, the ATO has allowed up to 6 members in an SMSF. So what we're going to see is more of these family more people in self-managed super funds, those older generations bringing their kids into their super.
Right, that's very interesting, isn't it? I mean,
Yeah.
I've got to say, my experience so far is having control of what I invest in, and being able to choose what I invest in, and I have the benefit of clearly being the managing director of Quanta, and we have some experience there. It's really important to me, and I feel really empowered by that, rather than, I guess, leaving that in the hands of other people. And don't get me wrong, there's absolutely a place for those industry funds. They do a very good job for a lot of people, but I do feel quite empowered by the fact I have full control of what I invest in now, which is great, and it's really good to hear the generational change.
Yeah.
And I guess for a business like Quanta, we're always trying to get, I guess, a younger demographic in. We love our retirees, and they're huge supporters of us. But for the longevity of this company, it's good to hear that change is coming about.
Yes.
So what are the benefits? What are the key benefits do you think for anyone who's thinking about getting into or opening a SMSF?
Yeah, sure. So I think, like you said just before, having access to taking control, people getting control of their superannuation and investing in asset classes that they wouldn't usually have access to through a large industry fund. So those asset classes are, direct property where they've got access to limited recourse borrowing arrangements, unlisted investments like the Quanta fund trusts.
Yep.
Those kinds of asset, cryptocurrency is a bit of a trend at the moment with superannuation. That's why we're seeing the younger demographics as well. So that's a huge benefit to people. Again, it's the pooling, being able to pool the assets together by having 6 members in an SMSF together with one investment strategy. So you can get access to property and the larger investments that you wouldn't usually
Get on your own as an individual, possibly.
Exactly.
Okay.
Exactly.
Okay,
Yep.
great. Now, can you run us through, I guess, for the people at home, what the basic process is for the setup of an SMSF, and just from a high level, how those steps work as you get from start to finish?
Yeah, sure. So basically, it's
Because, sorry to interrupt you, Mike, it's not as complex as people think. There's a bit of paperwork to do, but the actual, once it's done, I think it makes sense. But yes, there's paperwork, but it's not as complex as people might think, other than the paper trail.
That's correct. So it definitely is beneficial to members to be partnered with a specialist firm like Intello who has the appropriate documentation in place, and can support through that setup process.
Which they did very well for me, I have to say. Yes.
Yeah, thank you. So it's about just naming your corporate entity if you want a corporate trustee.
And you can call that whatever, generally, what you like, right?
Generally, but there are limitations. You can't have the same name for a corporate entity as someone else in the market. So that's something to consider if you're looking at a corporate trustee.
Could you talk to us about the benefits of either or both?
As you said, corporate trustee structure, which is basically a PTY Ltd company acting as trustee for your self-managed super fund. And then in the next bucket, you've got individual trustees. So them personally when I say the members, acting as trustee for their self-managed super fund. What we see at Intello is probably, I'd say maybe 99% of SMSFs are set up with a corporate trustee structure, and there are a number of benefits to this. Some of the major benefits that we see are basically ease of administration. So all super fund assets have to be held in the name of the corporate trustee or the individual trustees as trustee for the fund as a naming convention. So what happens if a member either dies, changes, resigns out of the fund, or those kinds of things? In terms of administering those assets, if it's in the name of a corporate entity, all you're doing is removing them as director from that corporate entity. So you don't actually have to go and change all of the names of the assets that are held in the fund. That could be, shareholdings, that could be unlisted investments, bank accounts. So it becomes quite administratively beneficial to have a corporate trustee structure. And the second thing is better asset protection under a limited liability company. So that basically entails that the individuals aren't personally liable for the SMSF liability. So if something was to go wrong, you've got a limited liability company acting as a trustee of the fund. So there's a level of protection there.
Can see why 99% of people are taking that option.
Then you've got things like the ABN tax file number registrations, which Intello as a provider would be doing on your behalf. And then you've got the documentation side of things. So, all your setup documents, including your trust deed and your statutory documents.
Which seem really important for a lot of things. I did the trust deed. Once you have that in your hand, things can start moving in other areas.
Definitely, that's correct. So you need your trust deed to set up your bank account, which is the next step once the docs are signed. So you'll need basically, I think most banks require a certified trust deed. So once you get the bank account set up, then the final step is to then roll your money from your industry fund into your self-managed super fund bank account, and then you're open to investing.
Yeah, and look, again, as I said, there's a lot of paperwork in between all of that, but it's really those key steps. Choose your corporate trustee, choose your SMSF name. You'll go and register with ASIC and the ATO. Get the ABN tax file number up and going.
Yep.
Go and apply for the bank account with your trust deed, and then really transfer the money over and start to invest.
Yep.
And keep a very good record of all the things you're investing in, of course, Mike.
That's exactly right. Yes.
So it really, I found that once you broke it down that way, it's simple. It's just a few things you've got to get done in between. What sort of time frame do you think it would take for someone who's reasonably organised and efficient to get that set up?
Yeah, look, that's a very good question. So I would say, look, anywhere between 2 to 4 weeks at a minimum. It really depends on ATO checks in the background. They would be checking, the individual members' situations in terms of their personal returns, what other entities they might be connected with in terms of trusts and other investments. So those are the kinds of things that ATO are looking at in the background. So it can take a little bit, it can take a few weeks to get the complying status of the SMSF once those ATO checks are completed as well. So, and then you've got to open the bank account.
Takes a few days, maybe for 3 or 4, then you've got the transfer to come over from your current fund, which can take, probably between 2 and 5 days, sometimes slightly longer.
Yeah, that's right. I mean, some of these industry funds, they like to hold on to the funds for as long as possible. So some of them can make it quite difficult to release the funds. But generally I would say 3 to 4 weeks is probably standard. But Intello really try to get the documents out within 24 to 48 hours. On the portal to our clients.
Yeah, I found that really helpful because there was only a few times I went back with queries, but Intello answered the questions very good. And it was really just a step-by-step, sign this, do that, have this certified.
Yep.
Here's the next step in the process, which is very good.
Yep.
So once the fund is set up, the super fund is set up, what involvement does Intello have from there?
So we are basically an ongoing full administration firm, end to end. So we will do everything from setting up all the way through to winding down self-managed super funds. Our main role is for the accounting, preparing the financial statements, lodging the tax return, and completing the audit on an annual basis for our clients.
Can you talk to us a little bit about how the annual audit and the tax return works?
Yeah, sure. So basically, both the annual accounts, annual tax lodgement, and the audit is required annually by the ATO. So the audit is you have to have a signed audit report prior to lodging the annual tax return, and that's 2 steps in the process that Intello completes for our clients. In terms of the annual audit, you're looking at a compliance, which is Part B, which I guess is got a bit more seriousness to it. That's what the auditor's looking at in terms of complying with the superannuation legislation, and any breaches around that can be reported to the ATO around in an auditor contravention report. So, and then there can be penalties implied after that. And then there's a Part B, which is also serious, but doesn't really get reported. There's only one little tick box in the annual return that's reported to the ATO, and that's around a financial audit. So that is looking at the financial statements are true and fair, and there's no material misstatements. So they're looking at, are assets valued correctly at market value, which is a requirement. and those kinds of things. There's no misstatements in the financial statements.
Okay, great. And could you give me just a more prevalent example of where people might accidentally breach or have an issue around their compliance?
Yeah, sure. This is a very good question. So what we see is it's, lending or borrowing from an SMSF accidentally, whether it's by mistake or on purpose. They would probably be the two either way, either borrowing or lending would be some of the main things that we see.
Okay.
You basically have to have separation of personal assets to your self-managed super fund. So that means no borrowing and no lending personally for whatever reason.
And I presume that that's more common because that's quite convenient in some instances for people, but not necessarily legal.
That's correct. I mean, they've got access to the bank account. Sometimes it's just as simple as, it's
Transferring
showing
some cash.
Exactly.
Yep.
Transferring the cash to an incorrect bank account, which can happen sometimes. But it's very important that that's rectified straight away. And you tell your accountant, tell your auditor if those things have happened so that you can put things in place to rectify those kinds of breaches.
Now, how much does it cost from a setup point of view, in particular Intello? And I can tell people at home that it was very competitive in terms of pricing, and I'm very happy with my pricing. But what is the initial setup cost for setting up an SMSF with you guys at the moment?
It varies in the market in terms of setup. So we'll touch on setup costs first. So you're looking at anywhere between, some of these sort of, smaller accounting firms that just focus on business tax and things like that don't specialize in self-managed super funds. Those kinds of situations, you can see pricing starting from $1,000. All I've seen setup costs at $5,000, which is a lot for a setup of a self-managed super fund. So Intello completes the full setup, including a corporate entity, for $1,150, including GST. And that includes, all your permanent file documentation, your trust deed, all your statutory docs, ABN tax file number registrations, or everything basically.
And a lot of patience, because I know a few of my friends have gone with Intello, have taken a long time, asked a lot of questions. So for the 1,150, I think it's been well worth it for them. That's really competitive. And just to confirm, that is invoiced after the fund is set up, and that comes out of the actual super fund balance. It's not paid from a personal account.
No, that's correct. So it has to come from a super fund. Yep. That's part of the rules.
Yes.
So yeah, once they roll over the cash, then they can pay the setup cost.
Yep. And I have to say, you guys gave plenty of notice about when that was going to come out. I think maybe even a month's notice to say we're going to invoice you for that as well, which I thought was very good. Yep. And what about the ongoing fees? Because that's a real sticking point, I presume, for people new and then existing as well. And again, you guys have got a bit of a deal you do for people who are set up via Quanta, but can you talk us through the annual fees for the audit and the return?
Yeah, sure. So that's, the ongoing compliance is sort of what we see in the market is a lot of providers like us have a flat fee for both administration, accounting, and the audit. And that can range, again, if you're looking at, these sort of random accountants down the road, that can range from $2,000, $2,500 all the way through to $5,000 a year that they're paying on for administration. So it can be quite costly, and I think one thing to consider is, is it value for money, or is it just a sort of an afterthought because you've got other entities that maybe they're doing accounting for or whatnot. So it's really about value for money and having a specialist provider that's going to be completing your return on time and giving you the support around, technical knowledge and making sure that you're being guided in a way that you're going to be compliant with your super fund. Intello usually charge around $3,300 for people who have unlisted investments like the Quanta funds. Mm-hmm. However, we've got a special on at the moment with Quanta investors, and that brings the price down to our lower bracket, which is $2,580, including GST annually, and that includes your audit as well.
Yeah, and I note that just comes out on a monthly basis and you don't really miss it too much. So I'm really happy with that pricing. I did have a look around and I'm very, very pleased with making the decision to come with you guys. So that brings me on to the kind of the big question, I suppose, for people thinking about a new setup. If your cost is $2,580 a year,
Yeah.
a couple of $100 a month, what do you think, and relevant to that or even the market, is the right amount of money that you need to have in your current super fund that you might want to transfer over to make it work for you?
Yeah, look, that's a very, very good question.
Very topical question
Very
too,
topical
Michael.
question.
Yep.
So there's,
Yep.
and my answer to that is there's no sort of benchmark that the ATO has set that you have to have a minimum. It's, you know, some people in the industry say it's 200,000, others in the industry say it's 500,000, but there's no, I guess, locked in amount that you need, and we sort of don't go off that as well. However, there's some very vital things that you need to consider here. The first being, I think, which is the most important, is it cost effective? Is your balance of 200,000, you know, the returns on that balance going to cover the administration, you know, the ongoing administration fees annually? That's a big question that people need to consider.
Yeah, I agree. So if you've got a couple $100,000 and you placed it with Quanta, for example, and you're getting sort of 8% on average, $16,000 a year, are you happy to pay the $2,500 to net off $13,500? You'll pay a little bit of tax, but you'd pay that on that coming in via your industry super fund anyway. So it's really just about, you know, if you can find an investment for 15% and you're putting 200,000 in, well, if you're getting 30,000 a year, either way, you've got to try and balance out what your investment profile is and what the return is going to be and what you want to put your money into.
Yes.
Yeah, it was a controversial question for a long time. You can't do it for any less than this. I think that's a good answer.
Yeah.
Thanks, Mike. And it's really important for us because we've got about 60% of our people are SMSFs, so they're making their money work for them. But you know, we deal with a lot of people in that area. I'm just going to ask you a few things, if you don't mind, about maybe some information on things for our existing SMSF holders.
Yes.
Can you talk to us a little bit about any of the new legislation stuff, maybe around this Div 296 and legacy pensions?
So basically, what it is, it's a extra tax imposed on members who have a total super balance of over $3 million. And so what it would be is, previously they were going to take into consideration unrealized gains, which was, you know, it was going to be affecting a lot more people in terms of pushing them over that $3 million threshold. So what they've done is they've taken that off the table in terms of the unrealized gains, and they've also added a indexation to that amount as well. So, you know, as
two things that they really should have done, and now they've finally come to
exactly
a little bit of sense and done.
Exactly,
Yes. Yep.
Exactly. So I think it's a huge win for the industry. You know, people are talking about it. I think a lot of people are relieved around it, and yeah, so that's a huge win, and also the timing of that as well. So they've sort of backtracked. Originally, it was going to start from the 1st of July 2025. It's now going to start from 1st July 2026. So it gives people a little bit of breathing space to sort of work through what that might look like now that there's those recent changes.
Yeah, thanks, Mike. It's a controversial and interesting topic, but I think it's heading in the right direction. Talk to me a little bit about legacy pensions.
Yeah, legacy pensions. So this is also an industry one, which is a big win for the industry. What they've done is they've allowed legacy pensions, which are things like non-commutable pensions and annuities such as market-linked pensions, to now be commuted, which they previously weren't allowed to be commuted. And what that's done is it's allowed people to then reduce them in their SMSFs and get those funds out of a superannuation environment, which would usually be caught up in reserves in an SMSF. So and that transition period is happening over the next 5 years to December 2029.
Right. Okay.
Yeah.
Good for people in that particular situation.
Yes. Yeah.
So it's otherwise been hard work.
Yeah, that's right. Yeah. Yeah. Which would usually have money tied up in superannuation, but now they're going to be able to get rid of those things.
With such a large database of investors that are in SMSFs, and we have various commentary about, and we do talk to some of the accountants involved in that. Some very pleased with the service, some somewhat frustrated at times with the service. How do you know you're getting good value for money from your accountant?
Look, I think it comes down to what it's costing and what are you getting out of it. Are these accountants lodging the tax return on time? Do they have the competence to answer your questions, guide you through, your annual lodgements, those kinds of things for the money that you're paying them? It pays to have a specialist provider that specializes in self-managed super fund. It's a technical area. It can be quite complex at times. And having that compliance, if there's a drop in compliance, it can be costly to members. So I think, having a specialist provider, having that support around a dedicated relationship manager, which is what Intello provides, is vital in the market.
Clearly, Intello being the expert in their field, and I understand that Prime Financial is its own beast and has a lot of other very, very good areas of the business. The Intello being specific to SMSF is really important. And I presume that if anyone out there is unhappy with the service they're getting from their accountant, is it an easy transition to come over to someone who's specialised like Intello?
Definitely. So basically Intello handles all of the transition for free. And what we do is, I guess the first step is just having a conversation with the client, getting them to fill out a transition form, which is just their general details of their self-managed super fund and their current accountant. Intello will then pick it up, contact the previous accountant to say, hey, look, we're going to take over this fund for the upcoming lodgement. Can you please provide us all the documentation that you have on file for that client? So things like the trust deed, all the permanent file documents, and then the previous lodged accounts and audit report, all those documents will be transferred over to Intello. And then basically we just onboard it onto our systems, get the account up and running, get the data feeds running through our Class software. Class is a leading software that we use to process our self-managed super funds. And then it's just a matter of engaging the client on the portal, getting them set up on the portal, and then it falls into the annual lodgement process that we go year on year.
Great. And I did find the portal really helpful. I mean, everything's pretty smooth sailing on that and online. And I see the commentary coming back from your team on, that's great, you've signed this, can you get that one done now? So, yeah, if you can transition and do all the legwork, I'm sure that's very helpful for your clients. Mate, it's been really great to have you there. I've got to say that our dealings with Prime Financial and Simon Matter, the CEO, and guys like Matt Smith and other people in the business has been fantastic because we do some other things with them. Yep. Dealing with you guys in Intello has been really great as well. And as I said, I've got at least half a dozen probably people I've referred over to you that have converted over. So I can only speak highly of the whole organisation. By the way, Prime listed on the ASX under PFG. We've only had great dealings. So I really appreciate you taking the time out. I hope this benefits people at home. But thanks very much for being with us today.
Yeah, thanks very much for having me.
Our pleasure. And we look forward to bringing you another Quantacast soon.